I made over 20K the first week of trading this strategy, and the second week I made over 10K. And I promise you, if you don't skip this video or watch to the very end, you will be able to unlock the full potentials of the Revamped Divergence strategy and be on your journey to maximum profit. For starters, we need to identify what a divergence is. It's simply when the chart makes higher highs and our indicator, which is the RSI, makes lower highs. In this scenario, we can term this a bearish divergence, which every trader would take their entry on the highest high or the second high of the formation. But this strategy, there are things to be changed because we are revamping this strategy, making it better. So we will clear out the RSI and put a better indicator called the awesome oscillator. The awesome oscillator comes with many benefits, but we mentioned a few so it will be able to enlighten you guys why awesome oscillator is necessary and why you should use it instead of the RSI or CII or any other indicators. First of all, it comes with clearer signals, it's more understandable, and it has better entries. That is why this awesome oscillator is better in terms of looking and scouting for divergence. We will now look into the various patterns that fails and why traders lose in divergence before we dive deeper into this reverse strategy. As we get familiar to trading the divergence strategy, we notice that it also gives false signal, whereby the chart makes higher high and our indicator, the awesome oscillator, makes lower highs. This term means that we are in a bearish divergence situation, and normally we are to place our trade at the higher high or the tip of the line. And as you can see, it always leaves a drastic turn if you don't know the revamped strategy. Now let's look into the revamped strategy and how to take profit from the divergence market. Now that we know what a regular divergence is and the mistakes they can make, here is the revamped strategy and how to be able to be accurate in predicting divergence move. First step, we need to simply identify the market structure. And by market structure, I mean the highs and the lows, and obviously on the chart, it shows a bearish market structure. How do you know a bearish market structure in metal? It's simply when the chart makes lower lows and higher lows. This right here is a low, higher low, lower low, higher low, lower low, higher low, and lastly, lower low. And as you can see, this is a bearish market structure. So we now look forward to the next step in this revamped strategy. After identifying the market structure, the next step is identifying a divergence. And as you can see at the left bottom, we have a lower low, and our chart indicator, the awesome oscillator, is showing higher low. This term is a bullish divergence, and normally it can be said that it wants to change direction, or it just wants to take a little resistance hit and take profits for people that are trading. Now to what we have been waiting for, how to set up for the revamped strategy. Entry, take profits, and stop loss sections. Here we have an example on the chart. Price made higher high and our indicator made lower highs. This is a regular bearish divergence, and as a revamped strategist, we have to position our stop loss first. Our stop loss should be at the tip of the higher high, and the basic rule of this stop loss is that the maximum stop loss should be 30 pips and the minimum should be 20 pips. This is the best guideline to protect our funds. Next strategy is to identify our take profits section. Take profit must be the opposition candle at the previous low. As you can see, it makes higher highs and lower highs. The lower low is where our take profit should be. If this trade hadn't played out, we would have seen it clearly. But the yellow zone is where our take profit should be. Now for our entry, which is the final section, we have to take our entry at the tip of the higher high and straight down to our take profit. The zone should always be at the tip. Now let's take another example of the chart. Here we have a lower low, while our awesome oscillator shows us higher low. This tells us that the market is on a trend of changing to a bullish divergence. The first scope as a revamped strategist is to mark out our stop loss, which should be not more than 30 pips and not below 20 pips. That is the basic rule for the divergence strategy. Next up, we need to identify our entry. As we mark out, our entry should be the previous candle at the immediate high of the formation of the divergence strategy, which is this yellow zone right here. As we have drawn out our chart, our stop loss and our take profit, it's time for us to enter the market, and our entry should be at the tip of the higher high, just few pips above the stop loss. As you can see, our trade was a successful one. Now that we all know the rules of the revamped strategy, which is our stop loss rule, take profit rule, and our entry rules, let's look at it on the charts we looked at it earlier before the video started. So here we are on the live chart, and to implement this strategy, we recall that the first step is identifying the market structure, which we did, and identifying the divergence, which we also did. First other step is to check the TP zone. Now regular divergence traders put their TP zone at the yellow zone right here, which is the previous high. But as a revamped strategist, we are taking our TP at the immediate high of the strategy formation. Next step to the revamped strategy is setting our stop loss zone. And as you know, the basic rules for the revamped strategy is that the divergence stop loss should not be more than 30 pips and not be lower than 20 pips. We set our stop loss at the tip of the lower low or the higher high, depending on the direction of the divergence. For entries as well, we know that the chart is to be taken at the tip of the lower low or higher high, depending on the direction. And as we have placed this trade, let's take a look on how it plays out in the long run. Here we are, and we can see that TP was easily touched, and this is roughly about 90 pips prior to this revamped strategy. But if you are using a regular divergence strategy, you will wait for the higher high, previous high, and obviously it might turn into a loss. But to be specific, the revamped strategy is more direct and it makes room for more trades and more profits. As you can see that the revamped strategy is working, I hope you test it out and let me in the comment section on how it went for you. Please like, subscribe, share and comment, and that keeps me going and it motivates me to make more videos and be part of this trading community. Also suggest videos, as this video was suggested by subscriber, and that is what I'm doing. Well, with that said, we have come to the end of today's video, and I hope you guys like it. I hope you guys want to see more videos and want to trade more. Remember to be patient, remember to be calm, and remember to know how to adjust to time. Just follow the basic rules of the revamped strategy and you shall be able to see results. So what we've learned so far, we learned that when using the strategy, we check the market structure, identify divergence, entry zone, TP spot, and stop loss spot. Here we are, the request for this video, and I made it, and hopefully the subscriber gets the video. See you guys in the next video. Peace.